There are a number of challenges facing the U.S. market today. Some that impact many industries, including insurance, and some that are specific to insurance. I would say the first is inflation and supply chain issues. What we see is that those issues, like other industries, our loss costs are magnified as a result of that. We also have seen an increase in frequency and severity of property cat events. And 2022 is predicted to be an above average year. So, that's going to continue. There have been a number of non-modeled events like the California wildfires, the Winter Storm Uri in Texas, and Ida in the Northeast, which has been a problem. They've become more frequent. And, the issue with those events is that they're not predicted by models, which creates an exposure that's very difficult for insurance companies to quantify. There's the continued issues of social inflation caused in part by shifting mood of the country, nuclear verdicts, and regulations that encourage bad behavior. So the New York marketplace has all the same problems as the U.S. marketplace in general, but it's further challenged by certain laws and regulations that make it more difficult to do business in the state. So, for example, it's the only state in the country that has an active scaffold law. And because strict liability is imposed on building owners, a building owner it can do everything right, but still be forced to defend a claim and pay a large award to the employee of a contractor. In another state, the remedy for that worker would be through the workers' compensation system, which was designed for that purpose. So because there is a potential for large nuclear verdicts for an injury where an owner isn't negligent, premiums are very high, and carriers not skilled with dealing with those exposures are unwilling to take it on. And there are a number of other regulations and laws in New York that just make it generally difficult for insurance companies to do business. There are certain legislations and regulations that we watch carefully in New York. There's one that is pending. It's a bad faith law that, if passed, would make it more unfavorable to do business in the state and would likely force remaining carriers out of the state. And the reason that I say that is that the only way to manage the exposure from the labor law and certain other plaintiff-friendly legislation is to aggressively defend frivolous claims. So this law and other laws that place penalties on defending policyholders against nuisance and unfounded allegations will make it even less tenable to take on that risk. There's also a lead paint bill that's pending in the state that would prevent general liability carriers from excluding coverage. And while lead paint is a real issue that should be regulated, there are other ways to do it. And there are specialty markets that exist to provide that coverage. By forcing that exposure onto the same carriers already managing the exposure from the scaffold law, some may decide that the required premium would be much too great, and it's an exposure that they're not willing to take on. And what will happen there is it will create an even tighter market in New York State, in the state, which isn't good for policyholders. Currently, one of the issues in New York with regard to the tight market, it's not just in the primary general liability space, but it's in the excess market. Right now, there are, because of these unfavorable laws and regulations, excess carriers are really unwilling to take on the exposure because they have large limits that are exposed. So many of them have already left the state. So it's going to become much more difficult for policyholders to find the coverage that they need at prices that they can afford. So Greater New York Mutual, like many NIA companies, is domiciled in New York State. We're responding to market conditions the way that we've always done. We are a company that was founded over 100 years ago by building owners who at the time struggled to navigate a difficult New York City judicial system. So it's not that different now than it was 100 years ago. We certainly don't want to abandon our policyholders, some of whom we've had for more than 20, 30, 50 years. But like our peers, we need to navigate what's really an increasingly difficult environment. And the way that we do this is we make sure that we're charging an adequate rate for the exposure we're taking on. We work with our policyholders to ensure that they understand exactly what they must do to protect themselves in this environment, because what it comes down to is that there's no room for error. We also make certain that we're well versed in pending legislation and regulations, and we work with NAIA to ensure that we're getting proper representation and that our voice is heard. So NAIA does a lot to support its members in the market, and I personally think that anyone doing business in New York should be a member of NAIA. My company has been a member since the organization was founded because we understood early on that it's essential that legislators and regulators understand the full impact of the policies that they want to propose. And I can give you a recent example if you're interested, because NAIA has had a very big impact. There was a recent legislation actually that was signed by the governor that requires policyholders to give plaintiff attorneys copies of their policies early on in the course of a lawsuit. And, this is a problem because a case should be decided on its merits. It shouldn't matter whether or not a defendant has insurance or what limits are available. It would skew the answer. So, NAIA worked vigorously to educate all on the implications of having such a law. NAIA wasn't successful at keeping the law from being passed, but they were extremely successful in working with the governor's office after the fact to modify it, to make it so that while it is a problem, it's not as bad as it would have been. I would say that NAIA is not only good in getting in front of the right people at the appropriate time, but they're insurance people who understand the issues. They work hard to educate everyone in not only how the insurance marketplace serves employers and businesses in the state, but why insurance is an important component of the general economy. And I will say, I mentioned that my company has been involved. We've always had heavy participation. And just because it's a good business practice, it's really the right thing to do. I'm excited about the NAIA annual conference, for a number of reasons. I'm very excited to connect with my peers and hear what's going on in the legislature. NAIA has a great agenda. There's interesting sessions. Of course, the hotel is a nice place, and it's going to be really good to get together after 2 years of hibernating.